Hey guys, Adam here from DirectionTrader.com. Let's do today's, it's kind of a midday recap here rather than an end of day. I wanted to talk about a few things, including a trade setup that I just took in Crude. So today's kind of going to be an educational day rather than just a market review, because I am going to share a strategy that I just used that I find very, very effective. And if you guys have been following me pretty closely, I would just want to touch base because this is something I will use on a regular basis. So, and it's a nice way to maybe manage your risk a little bit better, a little bit closer. If you don't, maybe if you don't have a large account, this could also help you as well. Let's quickly go through the indexes here. Still very neutral, guys. Very, very neutral here. Sideways, 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 and more sideways here on the stock index futures. This here is the S&P. I'm just waiting. I'm waiting to see if I can go short if we break out below. Now, I want to see increased volume when we break out so we don't get any of them fake outs. But I'm bullish above, bearish below here on the stock index futures. Here's the Nasdaq. Same concept, guys. Here's the Dow. The Dow is a little bit weaker, kind of like the Russell today. They're trading down near these lows. You see these lows that we have in here from the past 2 weeks. I am watching them lows really, really closely, and if we can break out of them with an increased volume, I'll go with them. And then here on the Russell, same thing. We had this previous low from Friday, and then these highs up here from midweek last week. Watching them real closely. If we break out and we have a high volume breakout, we'll go with it. Friday, it was low volume. You see, it didn't even last. So we broke to the downside on Friday, quickly rallied back to the upside because it did not have the volume, the strength to continue on in that direction. So, watching more neutral markets, still got a neutral bias. As you come into the following day, watch the previous day's highs and lows. If we're trading above the previous day's highs, go long. Below the previous day's low, go short. And anywhere in between, just be careful. So, more sideways neutral action. I did have a very active day as kind of quiet as the market was today. We were able to take 4 trades in a live trading room. Made for a very interesting day. What we were using is the previous day's low on the S&P and the Russell. My first opportunity, I went long the Russell. It did not work out. Kind of fluctuated there a little bit. Ended up rolling back over. And then it popped up above. And just now I went short. Right whenever the trading room was ending. Right in this area, we went short as we were breaking back down below the previous day's low. As you see, here's previous day's low. We just took this short here on this little pullback here. It was more on a 233 tick chart. If I pull this up for you, it'd be a little more clear. Here's the short we just took, guys. Just went short right there, right before the trading room ended, and had a nice little drop here in the market. So, but let's go over to Crude. That'll be where I talk about this trade setup that we just went over today, and maybe this will be a little helpful. We have this Fibonacci. If you take fibs from the highs to the lows here, we had a couple different pullbacks. It worked a couple different times. Let's talk about the most recent. I like to use Fibonacci in several different ways. This situation here is going to be more for just give us some confirmation. So basically we use the higher time frame. This is the 5 minute. I'm going to call this an anchor chart. We have this big drop here, pulled back into that 38 to 50% zone. From there, we have this so-called resistance. It's going to be a resistance band there between them 38 and 50% Fibonacci pullback. So look for it to act as resistance. This is that same area. This area and this area are the same. So then go over to your smaller time frame. I don't care if it's a 2-minute chart, a 233 tick chart, what it is, and then start looking for a difference in price. Watch the lows and highs, and wait for a change in price momentum. We have a high up here. We had the most recent low right here. Oh, we broke that. So now we have a changing of the guard. Now the momentum on the 5 minute is short. That resistance is a resistance pointing to the short side. So then you go over to the smaller time frame and you do the exact same thing. You take a fib from your highs to your lows, and you take the 50% pullback or 38% depending on what kind of fib you're using. Let me get rid of some of this. And you do the same trade, but rather than putting it on up here with a like a 5 minute where you're going to risk, say you're putting your stop above the 618, you're probably going to risk somewhere in the ballpark of 25 ticks on the 5 minute. Over here, if you do the same trade, you're looking to get short here around the 25s. Your stop can be right up here around the 32, 33, so there's an 8 tick stop. So you're basically getting in the direction of the longer trend, so you're taking the same trade, but with less risk. That makes sense? You have to wait. Here are the keys. You want to wait for resistance. Then once you're into that resistance zone, you go over to your smaller time frame and wait for a change in price structure. Wait for there to be a new lower low. Then draw your fibs in the same direction of your anchor chart. And then take that opportunity. You're going to have significantly less risk on, and you're going to be in the direction of the same exact trade. Very, very, very high percentage opportunity for me. This is a trade we just took in the live trading room. We just shorted the crude here for a really nice profit to the downside here. So I wanted to share that with you guys. Anybody that's never seen me do this before, this is a very, very helpful tip. This is something I've been using for several years, and it's something I think I'll always use because it's withstood the test of time, and it continues to be a very, very positive strategy for me and approach for me. So if you guys have any questions about it, go ahead and email me, Adam@directiontrader.com. If not, thanks for watching and have a good afternoon.